Bitcoin is challenging all-time highs once again. We have pretty much totally recouped yesterday's losses, but once again, I am planning a borderline crazy short position from the top again. Let's jump right into it. Bitcoin is at a price of $125,132. Now you can see on the shorter time frames, we have slowly but surely recouped all of the losses from yesterday. Now, if you watched yesterday's video, you will have seen me move my stop loss into a profitable price range. We stopped out of this position, of that last short position, at a profit of about $400. We moved the stop loss up here to 123,571, and that was indeed stopped out for a take profit of about $400. And the thesis for this trade essentially was leverage longs piling in to the market during this run up from lows. And we predicted that we might get a little punch through the last all-time high, followed by a retracement, and then start hitting some of those stop losses from some of those leverage positions and starting to liquidate some of those positions. We got out of that trade a little bit early, or at least we planned to get out of that trade a little bit early, because we didn't see liquidations in quite the same amounts that we were expecting. We didn't see a cascade of stops going off and massive price action to the downside. And in fact, the balance of leverage in the market between the long and the short side balanced out, and indeed price started to move up. And you can see this reflected over the last 4 hours. All of the liquidations have been on the short side, right? So that's other people jumping in short after presumably they saw prices attack all-time highs and then get beat down again. That's also reflected on the 12-hour. You can see 124 million short positions liquidated versus $48 million worth of long positions liquidated. There's a couple of different conflicting signals to me right now, which are on balance motivating me to try and short the top again. So the first thing I want to look at is the fear and greed index. Okay, so Bitcoin is a stone's throw away from all-time highs, and yet the market isn't excited. We're at a 59, so that is technically neutral. We're leaning across to euphoric or positive on the fear and greed index, but we're still neutral. Okay, 59. No one's getting massively excited about this. That tends to make me think that this move might be more sustainable. The second thing that also leads me towards thinking that this might be sustainable is the ETF inflows. So you can see over the last 1, 2, 3, 4, 5 trading days, we have had positive net ETF inflows. The highest of that being nearly $1 billion worth of aggregate ETF inflows on the 3rd of October. Of course, no ETF trading over the weekend, so we're still waiting for Monday's data from the 6th of October to print. But this means that essentially, where's my daily chart? Here we go. Over these trading days, over this move up, the ETFs, i.e. institutional money, big institutional money, has been accumulating. What they want to do is get best possible price. So you'll see a lot of back and forth action. I do think this move today is somewhat characteristic of that. But again, we've got to wait to see the data from today, the 6th of October print, to make a call on that. The thing is, I can see once again an imbalance in leverage in the market. And this has been consistent over the last, the 7-day profile. You can see it. There's just massively more leverage long positions in the market than there are leverage short. That means a lot of people are getting the market on borrowed money. They're levering up their capital to increase their exposure to the market right now. And as we know, as we are very familiar with, when traders trade with money that they don't have, they can get into a situation where they can become liquidated, i.e. forced to sell out of that position. And that puts, or can put, rapid selling pressure on the market. So this isn't necessarily in itself a reason to get short. Okay, this means that right now there are a lot more people long in the market and people long on leverage, but that's not in itself a reason to get short. But there is an imbalance, and that means if we break all-time highs and the result again isn't very exciting, and it might be, okay, it might very well be the time that Bitcoin actually breaks through the all-time highs and we rip up into price discovery. But if that doesn't occur, there are plenty of leverage longs here to liquidate, and doing so a second time, right? We saw the miniature version of that yesterday. If that is to happen again, I think the result might be even more dramatic than we saw yesterday. I would also say on balance that this idea is of higher risk today than it was yesterday, simply because it's unlikely, right, that that pattern keeps repeating itself again and again and again. But nonetheless, I have prepared some limit orders to get positioned. Once again, the same as the last short I took at the top of the market. I'm not necessarily expecting this to win, but I do think there is a chance that it wins, and as such, I want to be positioned and ready for that. So I have taken a measurement from, if we look at the last all-time high, right, and the break, the last time we broke to the true current all-time high, that was a move of about 1.4%. Okay, so if we take that move, if we were to replicate that on a break of this new all-time high, that would bring us up to a price of 1.4%. That is roughly $127,500. So I have taken half of that, right? A movement of 0.7% up from the all-time high. Now again, I'm trying to place orders here in an area of price discovery, an area that Bitcoin has never traded before. So this is inherently massively risky stuff. We're also shorting in a bull market, which is pretty crazy, but fairly often I would say it pays to do the opposite of what everyone is doing, at least over the short time horizon. So a move of 0.7% up from the last all-time high would take us to a price of about $126,600. So I've prepared an order in the book at $126,600. We've gone for a quarter of the position size, so that is a 0.2 Bitcoin size, again 20x leverage. I've also, planning to average into this trade, prepared another limit order in the book up at $127,500. Now my stop loss for both of these is up at $129,000, and that would give me an average loss, right? If we rip through both of these limit orders and we're filled on both of them, that would give me an average loss. And then, we came up and hit stop loss, we would lose about $600 on this trade. I'm totally comfortable with that. Right, that's tiny compared to the $13,400 account size. And as I've spoken about before, I'm not trading with money that would significantly impact the portfolio. What I think is more exciting about what's setting up here is actually a potential to get long again at more favorable prices. We'll be watching how the leverage is building in the market very closely. Earlier today, we actually saw the leverage pretty much totally balance out or remain balanced out from yesterday, right? The reason we got out of the trade the last time we got into this position, it was because we saw the balance of leverage longs versus leverage shorts come into something of equilibrium. Either way, I think things are going to get volatile this time. There's also something happening tomorrow, which I feel almost uncomfortable talking about, but that is the fabled full moon, bull moon, which is just a few hours away. And I brought up this chart before. If we look at moon phases versus the price of Bitcoin, this is almost always true that the market goes up after a bull moon. I mean, you can see that replicated time and time again. I have absolutely no idea why this works, but it seems to work. So something to be aware of. That's happening in the next few hours. Once again, I might wipe these out depending on how we approach this all-time high, and depending on how particularly the leverage and the order book starts looking as we approach those. But best possible case scenario for me right now, as these orders are set in the book, is a breakthrough all-time highs, and then a slight pullback. We can see the leverage remains in the market while this is happening, and then liquidations and a pullback similar to yesterday, potentially of greater overall size, right? A bigger drop, just because we are looking at, over the longer time horizons, a lot more cumulative long leverage, and hopefully a nice big rally from that drop. I will be looking for longs if we get a nice big drop to the downside, because I still think overall where we are, right, things are still looking bullish. Okay, institutions still accumulating, full moon on its way, if you want to pay attention to that. But there we have it. So not positioned yet. I do have limit orders in the book. Once again, this is incredibly high risk trading. I'm not risking a lot of capital on this, but I do see an opportunity there. And I think when you see opportunity and when there's a plan, it makes sense to deploy capital and to act upon that plan. But as always, absolutely nothing I say should be considered financial advice. This is purely my opinion shared just for entertainment purposes. Thank you so much for watching. Plenty more to come. Catch you in the next one. Bye.